Hi everyone. Today is December the 4th, and this is the Moneyball Morning Report for the Benzinga Pro platform in an unusual midweek wide-angle range. I want to go through what we are seeing today. Every day this week, the call walls have moved up, meaning that people are expecting price to edge higher, but their hope is it doesn't stay higher because they're actually short on those edges of the call walls because they're selling those zero DTEs by and large, and a big book is holding them, trying to adjust delta on the day. And when it breaches a call wall, it sends these dealers into the market to buy so that they flatten out their deltas. That's the easy description of what's going on. And so here's the range. Old resistance, new support, held it for about 3 weeks, pulls back, fills the gap off of the open, and then continues to run. This tells me we are still aggressively in a buy the dip formation. And so what this is saying is dips are buy zones. And so that's what we continue to have. The sweet numbers that we might look for are 602, but if we break the overnight high and we pull back in the first hour of trading and see that we hold that edge, we are going to have more buying. Take a look at this. Look at this break. I mean, wow, right? Just clipping the edges. This trend line is now broken, so we are going to delete it. All right, and now we are looking at this. If we put ourselves a channel in play, we can see dips. Yesterday's closing VWAP looks like frontline support. That is 603.30 with a deeper support at 602.63. As long as we hold those levels, dips are buys. Sideways pressure expects that we dip before we bounce, okay? So the range of motion here tells us, hey, dips are going to be buy zones, all the way down into 602. Where am I wrong? If it loses 602 and doesn't immediately recapture it. So what do you take away from that? If I'm long at 602, where's my support edge going to be to tell me to get out of the way? Well, 602 even is the closing VWAP from 3 days ago, and then all of a sudden we're down here to 600.95. And so that's really going to depend on how you look at risk to help you with that trade. All right, let's go to the Qs. We had a fade and then a big bounce. Not really sure what's going on right there, but let's take a look at the weekly. Remember, the boxes are drawn by old resistance, new support, into the edge, okay? So here is the original box, and then I have duplicated it above and below. What are we doing? Trying to break to the north. 514, I did not think we would get all the way up here. This, I think, is short covering again, but that's just my thought. This is quite the rally we've got going. Where is support? Well, let's have a look on the dailies. It is clearly by the dip. Momentum is higher. Yes, volume is slipping off the rails. That is a key concern for me. But the sideways motion says dips or buys. Look at where it came into right here. Amazing. Remember, I said, hey, you want to go to the 8 o'clock box, and this is for any instrument that has high volume. Go to the 8 to 9 o'clock box. If it breaches it, pulls back and holds the floor of it, you've got yourself a buy zone. And that's exactly what happened. Today, our 8 o'clock has just started, so it is a very wide box, right? Which tells me I want to be careful here in the Qs. And if it loses 519.50, I need to step out of the way if I'm thinking about a long and let it come back. If you want to short it, you know where your stop is. It's these pre-market highs as they sit, and that number above is 520.50. Okay, now let's get to the ES. Whoops. Let's go to the weeklies here. See what's going on. Again, we're looking for consolidation out of a breakout. Here's the breakout. Here's the consolidation, almost 4 weeks of it. And now we'll break higher. So what does that mean? Well, it means 60-20 is likely our floor Is it 60? 60.25 is likely our floor in the near term. 60.70 was yesterday's call wall. And so we breached it. These call walls will accelerate price action behavior if the traders are upside down. Now it's the end of the day yesterday. Options expired, the 0 DTEs. Now they're sitting here. Pullbacks to me into that old call wall yesterday at 60.70, going to give us some buying pressure. So let's take a look. Notice 60.70 is value area high. Is this bullish? You betcha. Have we stopped heading higher? Yes. But that doesn't mean we're going to stay lower. It just means for now, 60.82 and some change is the top. So that's going to be the first target that we press into if we can come back to 60.70 and hold. What's the support area? 60.63. That's the volume point of control also, and that's very, very important for this chart right here. So a few wide angle ranges for us to stare down as we sit in this choppy block of motion. Above us, what do we want to see? Well, let's expand this line here for the top of the box, range formation. 60.85 is the top of the edge there, and then let's clone this rectangle and put it up here. That's 61.10 and some change. Half back, half of the range is 60.98, 6100. Looks like something that we certainly could see, right? 60.98, 60.97, something like that. All right, here we go. If we lose this ledge at 60.70, here is the close of the volatility band on the weekly edge, all the way down at 60.58. All right, that's what we're looking at. And then the base of this noise sitting around here comes all the way back to 60.46. All right, when do you want to say, holy cow, I better not be long anymore? My thought is, if it loses 60.70, it's got little squishy bits. If it recovers 60.70, you get to stay long. If it collapses below 60.70, you don't, right? I mean, that is simply what I am thinking from that perspective. All right. Okay, let's go to the NQ. Start with the weeklies. Take a look at this. Remember, listen, this works so well. I really want you to take a look at it. Look, resistance, 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 breakaway, pull back into support, dips into the box, but holds the middle edge. And that's 20,362. Let me see. Yes. So what are we looking at? This is a breakaway. 21,561 to 21,896. Let's see what the call wall is here. Ooh, the max is, we breached the call walls here, so I'm going to put some new levels in. 468 is that next ledge. Easily we could move into 468 from that space. We are going to be getting these these gamma levels into TrendSpider at the end of the year, which is going to be absolutely fantastic. Oh, wait, I need to go to the hourly of the NQ, and let's see what's going on. Here we are. Wow, that's value area high right here. Look at the breakaway. Dips, absolute buy zones. Absolute buy zones. Let's clone this rectangle here and move it up. It gives us the move into 528, which is very close to that 560 zone. I like it a lot in terms of pullbacks being buy zones. 367 looks like a really nice support area. If it loses that zone, folks, it's going to head down into the opening range candlestick formation, and that's all the way down at 303. Okay? Let's go to the YM. This one's still pretty range bound, kind of tight, but notice, right? Old resistance, breakaway formation, comes back, holds the halfway marker of the box, and then completely rallies to the upside. What is the big picture to watch? Can we get up over 45,188, right? 45,180. That's really what we are looking at for the breach. It's going to give us another move to the upside if that happens. If it doesn't, we hit the bottom of the box, 44,450-ish, and then the halfback, 43,940. That's also the weekly VWAP band. So that's what I'm taking a look at. Big sideways pressure event right now in this space, but clearly here's a baseline. Here's yesterday's VWAP. The traders are trying to hold these upper levels very much by the dip. Let it come in to support. Where's that zone? To me, it looks like the hourly high at around 44,924. That makes for a great buy space. All right, let's take a look at Bitcoin. It was very quiet yesterday. Look at this compression. Sitting well inside the box. Still, we get to, I don't know why that box is not giving me some moves. Let's take a look at the weekly. Take a look at what's happening, right? We are building a consolidation space. Old resistance, becoming support. That number's about 91,000. And so dips into that zone, 91,750. Going to make good buys. However, we see a clear ceiling here for a breakaway at 100,234. Where will we go after that? The box tells us that we go to 105 and then 110 or 1,009. We should hit 110 easily from that range. If we fade, here's the bottom of the box, but it's right there at that gap. So 81, and then the value area high, 77. This is the number I am looking for to re-engage in a longer trade into Bitcoin. Not doing anything right now. That's the number I'm looking for. Absolutely. Okay, so that's what we're staring down. Building consolidation. This is this motion that we've talked about in the past, now forming up in the present. So you can see the breakaways. Above this area, we go long. Below this area, looks like a short. But we've got very bullish formations. And notice the volatility and volume have really begun to compress. This is waiting for another big move, but I do not know the direction. Let's take a look quickly at the RTY. Here it is, old resistance, resistance, resistance. 3 weeks of consolidation, breakout, but notice, not holding new highs. It's backed off of them, and it's about the halfway of this box. And so what do we do here? Well, this presents a buy zone, okay? So this area at around $2,411, buy zone. If it loses the area at 2350, then there's a problem. But from a weekly formation, this is setting up as a buy zone. Very clearly, the problem is your risk is going to be a little bit wider. Well, 2392, the half back of the candlestick, of the box is somewhere between 2364 to 2350. I say wait for the 2350 if you want to go long. If you're interested in going short, from a daily formation, it's got to get underneath 2413. Let's look at oil. Oops. We take a look at the weekly formation. This thing is stuck in the mud, but we've got some action here. Take a look at this box. All the way here, primary resistance, primary support. Primary support, 66. Primary resistance, 73. Where are we? In the middle of heavy congestion with the value area low here. This is sort of a do or die. I despise trading in formations that look like this. I'll wait for the bottom to go long. I'll wait for the top to go short. And if I come back and make a higher low, then I've got myself a confirmation that price action is moving up. As of this time, I do not. I do not like what I'm seeing here in oil. It looks like a mosh pit, and I don't want to get in there. Having been in a mosh pit, it's a very uncomfortable feeling getting slammed around by people who just, I don't even know why I entered that mosh pit besides being young and stupid. Well, that's enough reason. We kind of do those things all the time, don't we? Okay, so here is gold. What's it doing? It's consolidating in a very wide range. The dollar, friends, continues to hold. It's in a topping formation, which could give gold a little bit of a bounce. So if you're saying to yourself, well, maybe I can take this to the top of the box, you can. If you can get involved from 26.40, you've got to get up over 26.70, or this is a failed event, right? If it holds, great. 26.80 might be where you're headed, but it's got to get up over 26.70, and then you can stair step your way upside. Right now, this is very ugly. It could move up, it could move down, and you can see the piano keys on gold. All right, so that's it for price action events today. It is a buy the dip, but we're sitting midweek. We've got a lot of price action. We've got employment numbers over the weekend, into the end of the week. Things could get very dicey. Plus, a few of these have divergent momentum attached to trend. So look for the edges and then watch them perform. All right? Good luck. Stay alert. Go small size. And I'll see you on the Benzinga Pro platform.